Hey everyone, good morning. This is Friday, October 7th. I'm joined by Michael Nato. This is Ryan Sean Adams. I'm today's moderator, I guess. We are doing an Ethereum Q3 2025 quarterly report. Q3 went by in a flash, and we are reporting out Ethereum. I guess you might call this like an Ethereum earnings call or the equivalent of a network report. Mike and I have started to do these every single quarter. This is like, imagine if ETH had a quarterly earnings call for token holders and it was presented in a more crypto native way. That's the data that Mike at the DeFi report has compiled, and that's what we'll be going over today. A few things before we get in. The full quarterly report for Ethereum is available at thedefireport.io. There'll be a link in the notes here. All of the data that is provided in this report is compiled by public on-chain data sets prepared by Mike and his team at the DeFi report and additional data partners. This is live streamed right now on X. It's also on YouTube. There'll be an archive on X and YouTube, so you can get it later. If you're watching this live, we might be taking some questions depending on what comes in and the quality of your questions. So reserve those for the end. You can put them in the chat somewhere. One of our moderators will pick those up, get them to Mike and myself. We'll probably run this for about 40 minutes or so, maybe a little bit less. And the agenda goes like this. First, we'll get some opening remarks from Mike on Ethereum's Q3. We'll do state of the network, including all of the data, maybe some questions towards the end, and some closing remarks. One last thing before we get in, gotta thank our friends and sponsors over at Bit Digital for partnering with us to prepare this report and all of this information. So Bit Digital, if you're not familiar, ticker is BTBT. They are a public company. They went all in on Ethereum. They're a digital asset treasury company. They used to be a Bitcoin mining company, sold all of their Bitcoin, and now hold over 150,000 ETH, staking it all on institutional grade validators. So every block streams fresh rewards straight to their balance sheet. Of course, you guys know that digital asset treasuries for Ethereum were a massive theme in Q3 and continue to be a major theme coming into Q4. So we want to thank them. They're a huge supporter of Ethereum. They're mega bullish on ETH. They're racing to go acquire $1 billion worth of ETH. And so we I guess, celebrate them on that journey. You can learn more about them at bit-digital.com. All right, Mike, I've spoken so much already. Give us the executive summary for Ethereum's Q2. What was good about it? What was kind of different, I guess, from previous quarters? How would you summarize this?
Yeah, no, thanks for having me, Ryan. Excited to go through a bunch of charts today. And just maybe a little preface on this. Like, if you're an ETH holder, this is who we built this report for. We think we're solving a big problem in the market with transparent on-chain data. And we designed the report so that it's easy for ETH holders to understand how Ethereum's network economics impact them as a holder and as a staker on the network. So exec summary. So this was sort of a like mini revival, I would say, for Ethereum in Q3.
Like a good quarter then? Is that what that means?
Mostly it was a good quarter.
Okay.
So most of the charts that we are going to share today, I think almost all of them, Ethereum's performance improved in Q3 versus Q2. So that's a positive thing. And what was interesting is we saw sort of like this renewed interest of using the L1 in Q3. So active users on L1 were up 25% on the quarter, and that sort of drove most of the economic performance in terms of the real economic value, how that impacts real yields. We're going to go through network fundamentals and stable coins and token economics here today. And all of those metrics were looking pretty good during the quarter. Ethereum added 30%. It grew its stablecoin supply 30% during the quarter, up to
30% in one quarter.
30% in one quarter, up to
Okay.
178 billion. 58% of all stablecoin supply is on the L1. When you add in L2, you're over 60%. So yeah, let's hop into the details here.
Okay, so overall, a bullish quarter on the numbers, and let's get into maybe what you call operating performance. We'll start with this metric, and I'm going to get you, Mike, to maybe explain some of these metrics a little bit for us as we get into the
Yeah,
rhythm of these,
absolutely.
quarterly reports. So the first one you have is real economic value, and we're looking at a plus 17 on the quarter from Q2 to Q3. We've got a plus 17%, right? Am I reading this correctly?
That's correct.
And
That's correct. Yeah,
but it's negative 58% versus the prior quarter, so 2024 Q3.
that's right.
What is real economic value?
Yeah, so what we're looking at here is a chart, since September of 23, so going back 2 full years, and it's pulling in the base fees, the priority fees, the MEV, and the blob fees. That's what's making up real economic value on the network. And what we can see in the chart is there's quite a bit of pink. If you go back more towards 2023, 2024, those are base fees, right? So the base fees on the Ethereum network are sort of coming down over time. We do see pretty solid consistency in terms of the MEV and the priority fee payments. But I think this is just a trend of what we're seeing is this line is sloping, down into the right, and then what you see is user activity sloping up into the right on the layer twos, which we'll get to a little bit later.
This is
But
basically revenue, though, right, Mike?
this is this
Revenue
is this
that goes to
is
stakers.
this is revenue that's going to go to validators, which then pass that on to stakers.
Yeah.
And this, if you're an ETH holder, why is this important? Well, this is going to impact the staking yield, which we'll get to in a minute here.
Yeah,
Yep.
revenue, I guess, is important for ETH holders. It's really block space sales revenue, both the
Mm.
ordering of the blocks, which is MEV, and then the transactions in the block space themselves, which is, I guess, the priority fees. And this is both generated by users on the L1 and then also in the form of blob fees on the L2. It's interesting that blob fees are negative 99% on the quarter, right? Because
Yes.
Rev is such an interesting story for me for layer ones because we're doing two things here, right? You Rev is only generated when demand exceeds supply, but supply continues to increase, right? The layer one block space in Ethereum expanded. We had a gas hike this
Yep.
cycle, so we got
Yep.
larger blocks, and of course, blob space continues to expand at a frenetic pace. It's going to continue to expand, and so we have more supply available, but we only generate rev when demand exceeds supply. And yet, it's part of the goal is to scale Ethereum layer one block space and layer two blob space. And so these sort of things seem at odds. What do you make of that?
There is sort of a tension here, and I think this is that's a great question, and I like the way you're phrasing this. There's a tension between essentially adding enough supply so that L2s and users can come onto Ethereum and not have to pay really high gas fees, and also keeping Ethereum's economics to a level that is supporting the supply side of the network and the security of the network. I think they've done a pretty good job of balancing these two things. And what we'll get to in a minute here that ETH holders and stakers should also be paying attention to is actually the token economics and how some of this feeds into that, right? If you're viewing Ethereum or ETH, the asset as a store of value, that is extremely important in addition to the potential yield that you're going to get from the network's economic activity. But we have seen, blob fees are down 99%. This is driven by the Pectra upgrade, which happened in May, and that increased the blobs per block up to 6. And we'll get to this in a little bit, but we haven't actually hit that target just yet. That's when state contention will pick up. Blob fees should pick up again, and I would imagine next quarter that we'll see, actually growth in blob fees.
How does that filter into this next measure, which is total on-chain yield, which is down 7.5% versus last quarter and down 13% versus prior year? These are related metrics, are they not?
They are. So, and people may be wondering, wait a minute, you just showed a chart that showed that real economic value is up 17%, priority fees are up 30% on the quarter. Shouldn't the total on-chain yields be up, right? Shouldn't those user payments be flowing to stakers? The answer there is they are flowing to stakers. So the increase in revenue did go to validators and stakers. But what happened during Q3 was we actually added 1.3% to the ETH staked supply. And so when you do that, you're sort of like you're diluting the amount of that revenue that can go to each validator and staker on the network. And so that's why the yield
So issuance goes down, basically, is what you're saying?
well, issuance, well, not issuance going down. Actually, when ETH staked increases,
Hmm.
issuance also will increase.
Right.
But when you increase the sort of revenue on the network, but you also increase the amount of ETH staked, just the amount of revenue that's being dispersed, sort of pro
Spread out
rata
over more
to that.
stakers, basically.
That's sort of what reduced the yield there.
And we're at
Um,
3% now. So does that basically mean if I'm a staker, that's kind of is this a real yield metric, by the way? I'm getting 3% in real yield, or how would you differentiate real versus nominal in this system?
Yeah, so this is the total on-chain yield, and so this is including priority fees, MEV payments, and also the issuance, and that's the consensus rewards that the network pays out to the supply side. So 93% of that 2.98% came from issuance during the quarter.
I
So
see.
that's network inflation. The other 7% came from priority fees and the MEV payments from actual
Okay.
user activity.
This is nominal on-chain yield denominated in ETH. I guess if you wanted to get some real yield metric, then maybe you could like subtract the amount of total ETH issuance over the year and just count that, whatever, that 7% that was just rev.
That's right. So we have this chart in the report. We don't have it for this presentation, but the real on-chain yield is not going to include the issuance. So it's just going to have the priority fees plus the MEV, the actual user payments that accrue to validators and stakers. And here we're including the issuance. And last quarter the issuance was 88% of the total yield. It went up to 93% in this quarter.
Okay, let's get to some more broad network economy metrics. This one I love, which is GDP. So we are up on the quarter 32% in terms of GDP. At You'll have to, what are we? The total number is 2.3 billion?
That's 2.3
2.3
billion.
billion?
Correct.
Wow.
Correct.
Okay.
Yes. Yep.
So for the quarter GDP, Q3, ETH GDP was 2.3 billion. That is up 32% versus previous quarter, up 25% versus prior year. Remind us again what GDP is measuring. I assume we want GDP to continue to go up, but explain
Yes.
this some more.
This is a really important metric. We get this from Token Terminal, so shout out to those guys. This is aggregating the total fees on all the applications within the Ethereum ecosystem. So it's essentially similar to how you would think about GDP of a country. It is essentially the goods and services sold by all the applications within the Ethereum economy. So it does not include Ethereum itself. It includes all the apps on top of Ethereum.
Basically, all
And
the revenue and fees that those apps are generating.
yes, that Ethereum is essentially providing security for. So the economic activity that Ethereum is providing security for, 2.3 billion, strong quarter, so up 32% on the quarter, mostly driven by, I mentioned, sort of this little mini revival we saw for L1 during the quarter. Most of that is playing out within DeFi, right? So a lot of the sort of blue chip DeFi protocols had a good quarter. Aave fees were up 120%. Lido fees were up almost 62%. Uniswap was up 45%. And then the stablecoin providers also had a pretty good quarter. So this is a really positive sign. We've looked at a lot of different like sort of correlation, analysis and try to figure out what are the key metrics that drive ETH's price. We just talked about real yield.
Mhm.
That is not super correlated actually to ETH's price, which is a little bit counterintuitive. But what we do find stronger correlation is on metrics like GDP.
Interesting. Does this include, say, revenue generated by DeFi protocol like Aerodrome on Base?
No, this is Ethereum L1 only.
Okay,
L1 only. Yep. Yep.
very good. Um, Real world assets on chain. So this is up bigly, 9.6 billion, nine point
Correct.
six billion in real
Yep.
world assets on chain. This excludes stable coins. I would imagine.
We do not have stablecoins on here. So this is most of this. So about 57% of this is U.S. Treasuries, and commodities are the other second largest category, about a little over 2 billion on commodities. And yeah, so this is just a strong growth. I think the sort of standout thing for this quarter was public equities. So that's a massive number in terms of percentage change there on the quarter, over 6,000%. The actual
Stocks,
number.
right?
What's that? That's
Stocks.
stocks. That's public equities. That's stocks getting tokenized. This is what everybody's been waiting for. This is the first quarter that we saw it. Basically, we saw sort of the first major sort of
Yeah, this
hockey
is
stick
a
move here.
6,000% increase, right?
Right,
But
right.
that base number was really tiny. I was in the single digit millions or something like this,
Right.
right?
The base number was tiny. We're up to about 300 million or so. So it's still a small number, even relative to the rest of the assets that have been tokenized on chain. But something to watch for in terms of issuers of these assets. So BlackRock has issued over 2 billion of that 9.6 billion. So, we're starting to see Wall Street become more engaged. And this is, to me, the sort of growth story for Ethereum, probably over the
Mm.
next few years with regulation, with the SEC's Project Crypto coming. This is the most important thing, and we could probably, I don't want to go on too much of a tangent, but there's a lot to talk about with what could start to play out with public equities on chain.
And if you fear we miss stablecoins, don't worry. We got an entire section on this,
We
right,
do.
Mike, coming up.
Yes,
But
we
but
do.
first, staked ETH. Anything to take away on this? So you're doing this as a percent of circulating supply, I believe, and then also the total amount of ETH. But maybe we'll talk about in the percent of circulating supply. Hit all-time highs this quarter. Is that correct?
That's right. Yeah. So as a percentage of the total circulating supply, we were at 29.8% for Ethereum, and we were up about 1.2% in terms of the total ETH staked as of 9:30 when compared to Q2. And if you're an ETH holder, like, why is this important to you? This is, as we covered earlier, as a network starts to increase its economic activity, um, that activity is going to get paid out to you. However, if the amount of staked ETH is going up, your pro rata share of that is going down. That is going to impact your yield. And that's something we sort of saw play out a little bit this quarter. Another interesting takeaway just in the staking sector is most of the growth we're seeing is coming from these institutional providers. So Figment and Block Daemon Block Daemon on there saw significant growth. We think this is related to treasury companies seeking out institutional partners to access staking. And so another positive development for the network.
One thing that I always find fascinating is still, even at like 29, 30%, ETH as a percentage of the network that's staked is a lot lower than other proof of stake networks.
Right.
You get something like a Solana, let's say, or a Cardano, what's that, like, 70 to 80%, something
Yep.
like that.
Yep.
And I'm not sure exactly what that reflects, but it is interesting in that more of Ethereum's base money, ETH, is kind of out in the wild as
Yeah.
well. Total value locked. So explain this metric. We are at 88 billion on the quarter, which is a 40%, 42% increase from last quarter and an 83% versus prior year. Is this total value locked in DeFi essentially?
This is total value locked in DeFi. It's the dollar value of all assets deposited, staked, or locked in DeFi protocols. This does not include stablecoins. We will get to stablecoins in a minute here. So for the quarter, yeah, 88.8 billion. We finished the quarter at up 42%. I always, tell people when you observe TVL, which I think is a good high level metric. However, it is influenced by the price of the underlying assets. And so,
Yes.
there is quite a bit of ETH that is in locked in DeFi. On the quarter, we were up 42% in terms of the dollar value of TVL. The ETH price was up 66%. So that tells you that maybe there wasn't as much like new ETH or new assets that were actually moved in, and most of that increase came from just the dollar to crypto asset price conversion.
Now, this chart doesn't go back to like 2021 and 2022, but my understanding from other charts I've seen is we're essentially at all-time highs in
Yes.
terms of total value locked. Is that
Yep,
correct?
that's correct. We are just, I'm not sure if we actually crested it this quarter. I'll have to go back, but yeah, we're very close to kind of where we were peaking out in, November 21 or so.
Now, you said GDP is often correlated with price. You kind of like that as a
Yep.
correlative for ETH price. How about
Yep.
total value locked? Do you find that that's a good correlation with ETH price? So total value locked go up, then ETH number go up?
Yes, and but the I guess the issue here, and we're getting deeper into a lot of this type of work, because of what I just mentioned there with the price of ETH being so, or TVL being influenced by the price of ETH so much that when the price of ETH goes up,
Of course, it would be
TVL is going
correlated.
to go
That's
up.
a
Yeah,
one-to-one
yeah,
correlation.
yeah, yeah. So
Yes.
so it's maybe not as much of a signal as looking at sort of transaction velocity or DEX volume or GDP, things like that.
But we are
Um,
getting a lot of the real world assets that are not correlated. Stablecoins, for instance, no correlation with ETH price. As
yeah.
stablecoin, goes number go up, is that causal with ETH price?
We have seen that there's a relationship between basically this is, and those stable coins are getting getting factored into the sort of ecosystem TVL. We've done some analysis on this when we actually add in the stable coins, which are actually more value, almost 2x the value of this TVL. So stable coins are 178 billion. If you add that to TVL, which is 88 billion, we start to see more of a correlation actually, which is interesting.
Well, that brings us to
Yep.
stablecoins. So, banger quarter for stablecoins. We're now on Ethereum looking at finishing Q3 with $178 billion worth of stablecoins. That's up 30% in one quarter. That's up 92% versus previous year. What's the story here, and what are some of the big growers, stablecoin growers on ETH?
Yeah, so really good quarter for stablecoins on Ethereum. This has been the big narrative, I think, over the last few quarters. So up to 178 billion. This is 58% of the total, crypto asset stablecoin supply. That's L1 only. When we factor in L2, you're at like 62% of the total supply within the Ethereum ecosystem. Um, and the largest growth for some of these issuers this quarter was Athena. So Athena had a really good quarter. It did have run into some issues a few weeks or about a week ago with the liquidation chaos. However, it was up 177%. Got up to 15 billion of stablecoin, value that's been issued. One of the largest, one of the best growth stories in the stablecoin sector this year. PayPal up 165% during the quarter. They've got multiple billions of stablecoin supply out there now. Tether was up 28%. Tether is about 53% of all stablecoins on the Ethereum L1 today.
Wow.
And we saw a little resurgence of DAI, which was nice to see, up 27%. They've got about 3% of the total stablecoin supply on Ethereum. And maybe the final metric I'll throw at you is just the stablecoin supply on L1 is about 2x the TVL of the network. So when you kind of
Stablecoin supply on L1 is 2x.
twice the size of the total value locked in DeFi. If you
Wow.
Yeah, so stablecoins are the story, and this, along with kind of the public equity story, I think is a thing to pay attention to. And what I'm really looking for is just how can we get more wallets into people's hands, and then what are the use cases that are going to get people moving stablecoins? Is it payroll? Is it merchants starting to adopt this for point of sale? But this is the key thing. And then once everyone has a wallet and some stablecoins on it, now you've sort of left the legacy system. So yeah,
And
big
you
story for
believe the
stablecoins.
broad narrative that we're going to grow, Besant says we're going to grow to trillions in stablecoins, basically. And so, if you believe that, I guess the thing to watch is what portion of those stablecoins end up in the Ethereum ecosystem, particularly on ETH layer one. Are they able to maintain that 50 to 60% of market share capture?
That's going to be the interesting thing to watch for, especially as some of the banks start tokenizing and issuing stablecoins. That is going to be, I think, the thing to watch for. But I do buy what he's saying in terms of, hey, we're going to push this. I view stablecoins as sort of like the new petrodollar system in some ways with Tether and how they're growing the network effect of the dollar abroad. And so I think this is going to be pushed. I think Tether is becoming very aligned with the U.S. government,
Mm.
and this is a way to grow the network effect of the dollar. New buyer treasuries, all of that. So big story with stablecoins, unfolding story that I think is going to get even more interesting as we go.
What does stablecoin transfer volume add to this story?
So yeah, not only was the actual supply up 30%, but we saw increased velocity, so more transaction volume on chain as well, so up 41%. The interesting thing here, and this is going to evolve over time, but most of this activity is still playing out on decentralized exchanges. This is mostly trading volume, where a stablecoin is being used as the trading pair. What we will start to see more as we get more use cases and maybe payroll and things like this for stablecoins is that percentage of the transaction volumes should start to slide down, and we should see it being used more for payments and just kind of everyday commerce. And so that's something that we're looking for. But DEX volumes were up in the quarter, so that impacted sort of the velocity of stablecoin transactions as well.
Certainly, and I'd expect to see almost some different behaviors on the L1 with lower transaction throughput versus L2s as well, and what those
Yeah.
stablecoins are doing. Let's turn to some economics around Ether, the asset, and token economics, you might call this, or monetary policy. Circulating supply of Ether, that's gone up, of course. How would you kind of explain this? What's sort of the, I guess, the annualized issuance of ETH at this point in time?
Yeah, so I think if you're an ETH holder, you always want to be paying attention to the supply, and this is one of the strongest elements, I think, of Ethereum. I think the Ethereum Foundation really got this sort of monetary policy correct, and you can see this by looking at this chart, and that pink line is basically going straight across, and this is happening during a period where we've been going through sort of a lot of protocol upgrades, a lot of transitioning happening with user activity from L1 to L2, and they've sort of stabilized the network in terms of its token economics, which I think is a strong signal to the market. How is this calculated? So Ethereum has an issuance policy, so it issues new ETH to validators, and that's how they compensate the supply side of the network for providing the security, and that issuance is dependent on the total amount of ETH staked. So as ETH staked rises, issuance is going to rise with that. On the other side of that, you have burned ETH, and that's coming from base fees and also blob fees. So if you can get a lot of activity on L1 via base fees, you're going to ramp up your burn, and potentially actually offset the issuance, and you're actually deflationary at that point, which is very interesting in terms of store of value narrative for Ethereum.
It's like an
Uh,
algorithmic issuance policy with multiple levers here. It's not fixed in the way that Bitcoin is, just 120, or
right.
sorry, 21 million, I should say, with decreasing rewards every 4 years. It is algorithmic, but it is low, right? Annualized issuance is less than 1%.
For the quarter, it was actually. So if we go to the next chart, we can get into that. So we call it the net dilution rate. This is essentially the issuance rate or the inflation rate of the network. And the thing to keep in mind here for ETH holders is, if you are staking your assets, you're not being diluted by the network. So the network is issuing new tokens to pay for the security, but if you're staking your assets, that's being paid to you, right? So this is
Right.
different from sort of being diluted with a stock, where the actual stockholder doesn't have the ability to not be diluted. If you don't want to be diluted, you just stake your assets. This applies more to non-stakers, and the net dilution rate, you can think of this as inflation rate of the network, was 0.78. That was the average annualized rate
Okay.
during Q3. So it was up a little bit, just because we had more issuance, because there was more ETH staked on the network, and the burn, did not offset that.
And if you
during the
want to be
quarter.
a store of value, you have to have fairly low issuance, right? So like if you're looking at gold, it's like 1 to 2% per year, depending on the price of gold and the gold
Yep.
mining out there. For Bitcoin, that is now, what is Bitcoin right now? It's
Bitcoin
below
is
1%,
it's
0.85, something like
it's
that.
like that. Ethereum is actually lower than
Yeah.
Bitcoin right now. It's not fixed, like you said, but the way that they've structured this monetary policy to, the way they've sort of set that up with those algorithms, with the amount of ETH stake rising, issuance rising, and then offsetting that with burn, it's working quite well, I would say. I mean, it's the inflation's lower than Bitcoin. So
Yeah, I agree. It's strong. Like ETH is strong in that aspect. I think it's a little harder to understand though than 21 million fixed
yeah,
supply,
that's
but I think we're
that's right.
getting there.
Yeah.
All right, let's talk about DeFi for a little bit. This is the story of DEX volumes, and this is a number that certainly went up on the quarter.
Yes, strong quarter. Like I said, more active users on L1 during Q3 compared to Q2, so up 68% in terms of total volume for the quarter. 83. This is combining the L2s and Ethereum here. So we've got both. Ethereum was up more than the. And this sort of tells the story of more active users on L1. Ethereum was up 83%, compared to also strong growth on the L2s, but not quite as strong. And Ethereum L1 did 33% more volume than the L2s combined during the quarter. That was only 9% more in Q2. So strong quarter for DEX volumes. Unichain, it also had a pretty good quarter, up 32%. We've been tracking sort of how a Uniswap is kind of transitioning from just its DEX into more of an L2. So
Active loans on Ethereum, pretty strong quarter as well. This is maybe what Vitalik in a recent post called slow DeFi. These kind of collateral backed loans. What are the numbers here?
yeah, so strong quarter. So up 67%. So active loans on Ethereum. This is combining Ethereum L1 and the L2s, was up 67%. This was led by Maple Finance, up 84%. Aave had another good quarter, up 82%. And also Euler and Morpho had very strong quarters. And in terms of the active loans on L2s as a percentage of the total on L1, it's about 12.3% of L1. That's up from Q2 when it was 10.8%.
And this is by all metrics at all-time highs, right? And particularly led and dominated by Aave, but all-time highs almost like, is this like looking like double or triple from the highs of 2022,
Looks really good.
2021?
Yeah,
Yeah.
it's been in an all-time high now, going back to Q1 of this year or so. So it's been a really strong run for sort of DeFi, slow DeFi,
Yeah.
and Aave's been leading the charge here.
All right, let's take a little bit look at the layer two ecosystem and zoom in there. So layer two fees as a percentage of the L1, that is 25, sorry, I'll just round it to 26% on the quarter. This is up 5% from previous quarter, up 63% versus previous year. I'm trying to think about this. So combined L2 fees as a percent of, do we want this to go up or down, or is it just an observation? What does this mean?
Yeah, I would say it's more of an observation so that people can understand sort of how the economics are shifting from L1 to L2. And so, yeah, we finished, the quarter. We've been talking about how L1 had a good quarter, right? 25% increase in active users. L2's also had a good quarter. So it's not like we saw this like a migration or something. It was kind of interesting that they both did well at the same time and improved. And so if you're a token holder, this is just helping you think through, like, as the economics shift to L2s, you kind of want to know how that's playing out at a high level like this, and then also how can that potentially impact you as a ETH holder, as a staker. How's that going to impact your yield? And
So
so we'll get into
concretely, what this means is L2s actually generated 30% of the total Ethereum L1 and L2, like the fee set. 30% of all the fees were actually L2 users and paid by L2 users. Is that correct?
So actually, the way to think about this is so L2 users, the amount of the combined fees for L2 users was 25.9% of the combined fees of L1 users
Okay.
on Ethereum is kind of the
Okay.
way to think of it. So it's just giving you an idea of like which, at some point the L2s should actually have more fees than L1, I would think. And we've been sort of tracking that. So right now we're at about 26%, combined L2s as a percentage of L1s. And we expect to see this to continue to rise higher. And we're just tracking how is that going to impact, blob fee payments, burned ETH. How does it ultimately impact the ETH token holder?
This is another fractal of what we were talking about earlier, which is there's some supply and demand dynamics, right? And supply is continuing to increase as well. And this is showing up in the L2 cost per transaction. I think you've zoomed in on base here, but
Yeah.
it's continuing to go down because base is increasing the amount of L2 block space. It's not because demand is decreasing. Is that the story?
I think that's right. So we've seen, essentially a lot of supply come on. Petra upgrade makes it easier, reduces congestion for pricing and user fees. So that went up to the target, blobs per block went up to 6. This was in Q2. We have not yet hit that. We do have a chart in here to show that. So we have not hit it yet. This is keeping fees extremely low right now. So the average. This is the average cost, just throughout the quarter, and it was a little bit under 2 cents on base.
So 2 cents to send a stable coin on base
Yep,
is what we're
yep,
looking
yep.
at this time, and that's continuing to decrease, which is good. L2 on-chain margin on base. Let's talk about this.
Yeah, so it gives you an idea of just sort of the trade-off, right? That Ethereum's making. Ethereum is a product. Ethereum L1's a product. It is, selling that product to L2s. And so, what is Ethereum getting out of that? Right now, it's mostly the L2s, I would say, that are doing quite well. And we may see like some sort of negotiation, or I don't know how this is going to play out at some point where Ethereum is able to claw back some of the
There has been
economics you.
some talk, Mike, of Ethereum instituting sort of a base fee, like in
Sure.
general for L2. So it's not just like fees during contention, but there's just
Okay.
like a base general fee. I think that's an EIP that's in
Okay.
the works.
Interesting. Yeah, we'll have to get somebody from the foundation or something on one of these calls at some point. But yeah, so this is just it's been a good trade off, right? For base for the L2s, their margin for the quarter was up just under 1%, and it was almost 98%. This is just pure on chain margin, right? We know they have employees and other overhead, but this is just pure on chain in terms of user payments that go to base and then what they're paying to L1 for security.
Yeah, I was looking at base economics actually earlier this week. It was something like right now, like 450K per day, something like that, which
Yep.
equates to like I don't know, yeah, 150 million or something AR. Like that's pretty good.
It's pretty
It's a
good.
pretty good
Pretty good
business
little
to be a
business.
successful L2 right now, and very
Yep.
profitable. L2 transactions by chain are up only. This is 20 million transactions over
Per
the
day.
quarter
Yep.
per
20
day.
million per day. Yeah, per
Wow.
day. So
Okay.
so L2s are doing about 12.4x the amount of L1 transactions combined
That's
on
bullish,
average.
right? That's
This is
bullish.
bullish. Yeah, this is interesting to me that Ethereum L1 had a good quarter, and then we also saw like even more activity on the L2s at the same time. So it wasn't like like it's cannibalizing itself. It's sort of like everybody started to do well in Q3. So transactions were up 17%. We saw like a huge. We haven't had a chance to like really look into what's going on over there, but Linnea, I don't know if I'm pronouncing that correct. I
Yeah.
believe this is the consensus L2. They had a really strong quarter
Hmm.
and saw a big increase in transactions, up 170%. We've seen World Chain continue to grow as well, and quite a few transactions running through there. Base was up 15% during the quarter. They are sort of driving most of these L2 metrics that we're looking at here. So during the quarter, they represented 51% of all transactions across L2s. That was 52% last quarter.
This
So
is cool, and they're all competing. I think in the Q4, the next time we do this, Mike, there will be some new additions to the L2s. Like one that I've had an eye on is Lighter, which is actually
Yep.
like this L2 perps exchange
Yep.
doing some significant transaction volume right now and scaled to kind of grow. Let's talk about L2 blobs per block. What this is part of the expansion of blob space that Ethereum deployed in its most recent upgrade. And it looks like we're almost starting to hit the maximum supply on this. Is that correct?
We're getting close. We're getting really close, and you can kind of see, the purple line there. That's the target right there, right? So as the L2 amount of blobs hit that target per block, that's when sort of state contention kicks in, and you get sort of a similar to what you would see on the L1 with base fees.
They get
The
really
price,
spiky after
the
that, right? Like,
prices get spiky.
yeah.
Exactly. It's just supply and demand, right? And so you can see that we were hitting it quite a bit in the middle of the chart there, and that was creating more burned ETH. There's more, it's impacting the token economics of the network, and so this is important. We did get up to like 5.8, so you can see there, like towards the end of the quarter, got very close. We've been tracking it even for the last few weeks. Haven't quite hit it, but it's sort of getting very very close there. So something to keep an eye on.
But we are scheduled to continue to increase the amount of L2
That's true.
blobs per
Yeah,
block
and
in
we'll increase
Ethereum
it
as well.
again. Yeah, so
Yes.
that tension is just gonna continue for
Right.
years here. Yeah,
Just like that rubber band here. Okay.
yeah.
My favorite part of all of this always is the store of value case for Ether, the asset. It's a big quarter when it comes to monetary store of value types of properties. Tell us what you're looking at in the quarter. Maybe this first is ETH, ETF AUM. So that is up 61% on the quarter. We're now at 6.6 million ETH in terms of supply. That's not the USD value in terms of supply, locked in ETFs. And that's up 140% from the previous year. It's interesting because it seems like ETH ETFs had a kind of a slow start when they launched in 2024, but this has just been a massive quarter for them, hasn't it?
Massive quarter. So the ETH ETFs hold a little over 14.5 billion or so of value, and 9 billion of that came in during Q3, and
Wow.
most of that 9 billion came in July. So July was
Wow.
just an absolutely torrid pace
This is
of
just the Tom Lee
ETF.
effect. What do you
This was
think?
I think so. I think so. Tom Lee had something to say about that. And yeah, so it's now the ETFs currently hold 5.5% of the total ETH supply. BlackRock was up 117% during the quarter. Franklin Templeton was up 57%. Fidelity was up 57%. So really strong quarter, from the ETFs. And I think this, helps strengthen that store of value, narrative for Ethereum.
Well, speaking of Tom Lee, this is a section all about ETH held in treasuries. And of course, Tom Lee is the leading ETH treasury company. I think right now, and a lot of this happened last quarter, they're at about 2.5% of all ETH supply
Yes.
locked up inside of BitMine, the ETH treasury company. But this has been an incredible pace on the quarter. Give us the headline numbers. What was the growth in held in these digital asset treasury companies?
So 367% in Q3 we grew, and I mean you can look at that chart. It's an interesting chart where it's just basically a stair. It looks like a staircase.
Yeah, these are all
Going,
purchases,
yeah,
like,
right.
billion-dollar purchases of ETH.
Similar size, so sort of purchases, and yeah, you're absolutely right. So BitMine now has over 2.5% at the end of the quarter, which was just a few weeks ago. They had 2.2%. So they're growing fast. They added 782% to their ETH holdings during the quarter.
Wow.
Um, BTCS was number two at 380%. SBET added 345%, and then BTBT added 336%. So, everyone's out there, buying. We'll see how if this is going to continue and what the sort of strength of this is going to be moving into Q4 and also next year. But this has been a really important catalyst, I would say, for Ethereum over the last few quarters.
And special shout out to BTBT as well. That is Bit Digital, and thanks to them again for
Yeah,
sponsoring this report. So good to see them in the
absolutely.
numbers. ETH balance on centralized exchanges that is going down. and it has continued to drop. And this has been quite curious to me. Uh, can you talk about this number? Why is it important in the store of value story?
It's important to me because it's showing that people want to hold ETH, and it's leaving exchanges, is kind of the main thing. Why is it leaving exchanges? I think it's because people want to hold ETH for the capital efficiency that you can get with it, and you're going to get that capital efficiency by going into DeFi. And so I think, that's, if you saw the other side of this, is that the amount of ETH in smart contracts continues to go up. And so I think that is what's playing out here. The other piece of this is the ETFs, right? So this chart has been, basically down and to the right for the last 5 years or so. It accelerated a little bit, I think, towards the end, because I think a lot of people are buying the ETFs now and not going on to Coinbase or other centralized exchanges, buying their ETH and then just like custodying it there. They're using the ETF, so that potentially is playing into it as well. But this is just telling me that people want to hold ETH and they want to do things with their ETH. The way to do things with your ETH is to go on chain and go into DeFi. So,
Yeah, so this is somewhat interesting because this is just ETH balance on centralized exchanges. It's at about 12 million ETH back, and it's the lowest level since basically the inception of the Ethereum network, right? Before ETH even had listings on centralized exchanges, which is extraordinary.
yep,
Back in 2020, it used to be closer to 35 million ETH on exchanges. I'm
yep,
also wondering if this is part of the story of like the diminished role of centralized exchanges. And it's a different kind of effect because like what we're seeing is more institutionalization of ETH inside of these ETFs and also these digital asset treasury companies. But I guess the ETH inside the digital asset treasury companies oftentimes ends up on chain anyway because they are looking for yield in the form of
right.
staking and they're looking for yield in the form of DeFi. So maybe that's some more explanation behind these numbers.
I think so, and I think that's part of what's playing out too. We mentioned earlier that ETH staked was up on the quarter, and a lot of that growth is coming from institutional staking providers. We're looking to see that actually, potentially increase quite a bit. We've actually been doing some interesting analysis on this. We're expecting the ETH ETFs to get approval for staking, being able to pass forward the staking returns to the ETF holders. And so we expect most of the value that's in ETFs right now is actually going to go into staking. And so then it's like, okay, how is that going to impact the yield? And there's a bunch of downstream impacts on that. So,
So good sign this quarter, good signs for ETH as a store of value asset. I guess when I zoom out, I mean, the big scoreboard is like kind of the world, right? What are all of the, I guess I'll say, denationalized commodity money store of value assets out there? And of course, if you look the charts outside of even crypto, number one is gold. What's that now, Mike? $30 trillion, which has
it's
been
added, it doubled
absolutely
in the
insane,
last
right?
year. Crazy. Yeah.
Number two is actually, and it's not Bitcoin anymore. I think since silver's been on a run, I think silver has exceeded the market cap of Bitcoin. I'm just going off memory
Yep.
here, so I
Yep.
think we're over 2 trillion on silver. So that'd be number two. Number three would be Bitcoin, and I guess number four would be Ether, the asset. So that's the big chart to watch if you're looking for the global story here.
Yep. Yep. Yeah, I would agree, and I'm looking for that narrative to continue to take hold. And I think one of the challenges, like you mentioned earlier, is just the store of value is just it's sort of a easier sort of explanation with hard coded 21 million versus
Yes,
the sort of
yes.
token economics of Ethereum. But I think as people get more comfortable, people, the Lindy sort of the chain itself, and the fact that it's really, solved a lot of these monetary policy challenges, should start to, like, take hold as time goes on, I think.
Well, that's it. Okay, so I don't think we have any big questions in queue.
Okay.
So maybe we can wrap this all up with any closing remarks you have just on the quarter, Mike. So overall bullish. I guess we haven't really talked about price, but definitely we saw some ETH price appreciation on the quarter. Where does that lead us going into Q4?
Yeah, so I would say, to people, we covered about a third of the actual information and insights that are in the report. So I recommend people check out the report, download the PDF, check out the dashboards. I think my closing remarks on just sort of where Ethereum's at is it's a good quarter. We saw improvement across almost all metrics, and I think what I'm looking for moving forward is more real world asset. I really believe that the story here is going to be real world assets. It's going to be stable coins, and let's see how this starts to play out. I think there's some concern right now about whether or not we're going to have a bear market or not. It could be a very different bear market if you have all of this adoption playing out, even if the macro isn't sort of cooperating. And so, yeah, I think good quarter. And like I said, a lot more information in this report. We did get it. We do go into fair value. We have a relative strength section where we actually compare ETH against all of its beta pairs in terms of how does ETH perform against a number of like core assets within the ecosystem. And we do some beta analysis. We do some correlation analysis. So quite a bit of information in there. It's a public good for people, and we made this for ETH holders.
It's amazing, guys, and you can access that, of course, at the DeFiReport.io. I have the link pulled up. You can download an ETH report. We're actually doing the same thing for Solana in an hour or so, Mike.
Yes.
So you've
Yes.
got that as well. So we could tease that. There's also accompanying Dune dashboards to support all of the numbers here. Mike has some incredible data scientists and analysts on his team that prepare all of those. I don't think there's anything better when it comes to ETH like metrics and output on the internet today. And another reminder, all of this will be accessible on Bankless YouTube, so you can send this to any ETH holder that you know. It's also on X. The next time we do this will, I guess, be January 15th for the end of 2025 Q4, and that report. We'll have that to you. And if you want, just in general, some of Mike's opinions on the current cycle. For instance, I see a question from somebody, Thomas. He says, "When do you think the top in this? When do you think the top in the cycle is? And will things continue to just grow or wash out?" I don't think we have time to get into all of
Yeah.
that and answer that on today's call, but we are doing an episode on Monday where I'm going to talk to Mike about his thoughts on the current cycle and where we go after that. So stay tuned to Bankless for all of that. We appreciate you joining us today, and we'll be back next time with another quarterly report in January.